I watch these crypto Twitter guys and they look at what we just did and they're like, oh, what happens when they dump it? Like they bought all this Bitcoin, that's bearish. They might sell it and that'll be bad for the market. Or, you know, when is he going to sell it? If it goes down by 5%, is he going to like lose interest? And I think they don't get it. I bought it for the next 100 years. And in 100 years, I expect that maybe we might borrow a little bit of money against it to buy something else we might want. I didn't buy it to sell it ever, right? I mean, the only time you're going to give up on something you love is when you lose faith, right? When the entire Bitcoin community comes back and says, well, we lost interest in mining and we decided to screw with you know, Bitcoin Core so that we can jack up the transaction count by a factor of 50 gazillion million. And we may have to take it down for 6 months and then turn it back on and we'll transition it through 2.0. When I lose faith, then I sell. Until I lose faith, I'm holding it forever.
Consider how Michael Saylor went from claiming Bitcoin's days were numbered to investing so much in cryptocurrencies.
I don't think it's unreasonable for someone that cares about the company, that loves it, to want to implement a control capital structure so that it doesn't get snatched out of their hands. If you bought Bitcoin and you were leveraged up and you pledged 80% of it, or you know, you see these guys that buy and they buy at 20-to-1 leverage. Like when the price of Bitcoin trades down $300, they get liquidated out, and you'll watch this liquidation where 2,000 Bitcoin gets sold in 60 seconds. When it gets sold, they get sold at an 8% or 4% discount, and they lose all their capital, and then the market pops back up. It's because they had too much leverage. If they really wanted to hold the stuff, you would be thinking, I'm going to buy it. If it trades down 10%, I'm still holding it. If it trades down 20%, I'm still holding it. I'm not going to pledge it. You want to be aggressive, pledge it, go up to 50% margin, but really, if you care about it, you don't pledge it at all. And when it goes down by 99%, you'll still be holding it. So, Nathaniel, I'll end with one observation. I'm unique in a couple of ways. One, I'm the longest lasting CEO of a publicly traded enterprise software company ever. I lived to see 99% of my peers quit or lose their job. But 99% mortality rate amongst my competitors. They all sold out over the course of 20 years. That's one interesting thing. The second thing is we did implement a capital structure so that the founders could pursue the mission of the business without volatility impacting it. And third, I'm not proud of this, but I'm the only public company officer, maybe the only public company CEO in the history of the world that actually lived to see his stock decline in value by 99.8%. My stock went from $333 a share to 42 cents a share. I kept my job. But if you were on my board of directors, you probably would have fired me if I did not have a controlling stake in the company. I kept my job and I kept the company, and I didn't dissolve it and sell it off to a megacorp to become the 167th division of IBM.
I went down the rabbit hole during COVID-19, Saylor revealed, admitting he was wrong to have doubted Bitcoin when it was about $600. The selling of the voice.com domain to EOS founder Block One for $30 million in July 2019 was the first step in his conversion path for a newly minted Bitcoin maximalist. Forward to 2020, and Saylor finds himself researching cryptocurrency. He devoured as much information on crypto as he could.
So 2020 was a wake-up call, and what happened in 2020 is, for the first time in my adult life, I felt like technology stocks were overvalued. Right? Like it was the first time. Like I would have sworn to you, I was a buyer all the way up till April 1st of 2020 on technology. And so my worldview gets crushed, right? If Main Street goes like this and Wall Street goes like that and they diverge, that kind of shattered my faith. Like it was a a real fate-shattering crisis that we went through. Things that I believed, that I would have sworn, that I would have just fought to the death over, I had to abandon. As I believed in working in close proximity with other people. I didn't believe in remote work, and I was forced to invert and open up my mind. And I realized that we're now in the virtual wave. This is a paradigm shift. The mobile wave, I was kind of excited about. You know, the mobile wave was paradigm shift of all the software leaping off of your computer onto your phone. But the mobile wave was not nearly as powerful as the virtual wave. And the virtual wave was a complete dematerialization of products and services. And that happened forcibly for all of us starting in March of this year. So when that happened, my worldview opened up. And with regard to the balance sheet in particular, I had seen the balance sheet as $600 million in cash that should over time earn 5 or 6% risk-free short-term interest once the world got their act together and started acting normal again.
Saylor advises against putting the balance sheet surplus in inflation-prone cash, low-yield bonds or overextended tech stocks. In a market like this, which he predicts will exist in the future, there are only two good ways to put surplus capital to work: stock buybacks and Bitcoin. On August 11, 2020, the publicly listed company purchased $250 million worth, only days after informing shareholders that cash was no longer a haven for its surplus of $500 million. The next Tuesday morning, it spent another $175 million. In May 2022, Michael Saylor took to Twitter to clarify the company's legal responsibilities for its Bitcoin-backed loans.
See, the Bitcoin community, there are traders. They're trying to figure out what direction it's going to go in the next 5 minutes. And I've done a lot of things in my life. I can't figure that out. I can't. So the way that we did this was calculated in order to be respectful to every tranche of investors, right? First we announce that we've got an opinion, right? We've got an outlook on our balance sheet. If you go back to our announcement, we said there's $500 million of cash. We don't think we're going to need it, and we don't think we can keep it in cash. That's the first announcement. And we have a opinion that we should use it to either buy some tangible assets or buy our stock back. The next thing we do, and we laid that out for the market so they all know, and that gives people the ability to act on that information however they will. The next thing we did was we took action definitively. We said, we've bought $250 million worth of Bitcoin, and we're ready to buy $250 million worth of our stock. Right? That's the definitive action, the tender offer, the Bitcoin. The next thing we do is we wait for 20 days because there are very defined regulatory guidelines for how you do a tender offer, right? We wanted to be very transparent. At that point, people can decide to buy the stock, to sell the stock, to wait, to not wait, right? It's all up to them.
According to Saylor, MicroStrategy has a $205 million term loan and must keep $410 million in collateral. MicroStrategy made headlines in early August when it announced the withdrawal of $500 million in Treasury reserves from cash. At least $250 million was to be transferred into Bitcoin. That's all for today. What are your thoughts on today's video? Feel free to leave them all in the comment section, and don't forget to like, share and subscribe to the channel. Thanks for watching. Till next time.